Question 32, Ashura, Rift PLC. Let's have a read and let's discuss. So after every little bit that you read, please explain everything that needs to be considered, anything that we need to think about a bit more. And yeah, we'll just discuss as we always do.
Okay. Ashura has been employed by Rift PLC since 1st of Jan 2013. She has also been self-employed since 1st of July 2015, preparing her first accounts for the 9-month period ended 5th of April 2016. The following information is available for the tax year 15/16.
Before that, what do we need to consider or think about, even if it's a basic point?
What is if she's like a higher rate, basic rate taxpayer?
We can't really tell from that information, but what I can tell you is she has been self-employed since 1st July 2015.
Yeah.
Preparing her first accounts for the 9-month period to 5th April 2016. So that tells me opening year rules, actual basis, but because she's preparing till 5th of April 2016, there will be no overlap profits.
Okay, yeah, it'll be the first 9 months.
Exactly.
Yeah.
Good.
Okay.
So, so basically employed and self-employed.
Yeah. So her employment is, so during 15/16, she had a salary of 56,200. On 1st of Jan 2016, she personally paid 2 subscriptions. The first was a professional subscription of £320 paid to an HM Revenue and Customs approved professional body. The second was a subscription for £680 to Health Club, which she regularly meets clients. Ashura was not reimbursed for the cost of either of these subscriptions by Rift PLC.
Okay. So point number 1, what are your thoughts?
She's a high rate taxpayer.
Good. Good. Point 2, please.
On point 2, the £320 can be deducted.
Why?
Because it's a professional subscription and it's approved by HMRC.
Exactly, that's the main thing. It's approved. So you can have other professional subscriptions, but if it's not approved, then you have an issue. Yep.
And then the second one you can't, because it's kind of she can use it personally as well. It's a bit of a
I see what you're saying. So you're trying to say it's not wholly or exclusively for employment purposes. It's partly. Okay, so there's a duality of purpose. She's using, if she's going to a health club, she's benefiting her own body or her own mind or wherever she goes for. So there's duality of purpose, therefore disallowable, because then every individual would do something like this, pay the gym membership through the employer. So therefore the key point there with the explanation would be duality of purpose, disallowable, meaning not wholly and exclusively for employment. Good.
And sorry, you know where it says the last sentence, she was not reimbursed for either of these costs. So if she was, what would I be doing then?
Okay, so to begin with, she's not reimbursed, so therefore we get a deduction for 320, but we don't get a deduction for 680. If she was reimbursed for the costs, then one second. If she's reimbursed for the cost, then you don't take a deduction for the 320. So effectively it's the opposite. And then you'll add exactly that. 680 would be taxable.
Okay.
Because the employer, Rift PLC, have effectively or technically or subliminally paid her personal expense.
Okay.
So therefore it's a taxable benefit, therefore subject to income tax and class 1 NIC. So for example, if you have a dentist fee, let's say £300, okay, and your employer pays it for you, that is fully taxable. Why? Because that was your personal, they call it a pecuniary liability, your personal liability, and your employer paid it. That's treated as some sort of employment income, some sort of earnings.
Okay.
Therefore, taxable as normal income tax and NIC.
Okay. During the tax year 1516, Ashura used her private motor vehicle for business purposes. She drove 3,400 miles in the performance of her duties for Rift PLC, for which the company paid her allowance of 55 pence per mile. So the HMRC allows 45p per mile for the first 10,000 miles. So she's been overpaid. So I would add back the 10p times 3,400 miles.
Exactly. So 3,400, when you add back, you mean you'll tax it.
Yeah.
Yep.
Yeah.
So £340 will be taxable. Good. Excellent.
During the tax year 1516, Ashura contributed 2,800 into RIF PLC's HMRC registered occupational pension scheme and 3,400 gross into a personal pension scheme. So I would ignore the 2,800 because
will we not get tax relief for the 2,800?
Oh, sorry. Yeah, we would.
It's an occupational pension scheme, so it's deducted. Yeah. It's effectively you're exempting it, so you deduct it from your employment income.
Yeah. Okay. Yeah, I'll deduct the 2,800, and then the personal pension scheme, I would inflate the basic rate band and high rate.
Excellent. Good. So personal private contributions, pension contributions, you increase your basic rate band. This is the gross amount, so that's it. You just increase it by 300-400.
Yeah.
And if required, you'd increase the 150,000 as well. But the occupational pension contribution is an allowable deduction. Excellent. Yeah. Any questions so far?
No.
I've got a question for you. On 1 Jan 2016, so only 3 months in the tax year, Ashura personally paid 2 subscriptions. Will this not have any effect on the figures?
No.
Why?
I think if it's happening every year, then I think it's fine. You can just take the yearly figure to be included.
Yeah, that's not entirely correct. I see what you're saying, and it makes sense. But what about, for example, if it was the last year, then would you prorata? No, you just never prorata. Why? Because it's just on a paid basis. So whenever you pay it,
okay,
that's it. It's not a benefit whereby it's occurring evenly throughout the year. So therefore, you just take it on a paid basis.
Okay.
Let's look at self-employment, please.
Ashura's tax-adjusted trading loss based on her draft accounts for the 9-month period ended 5 April 16 is 3,300. This figure is before making any adjustments required. So the first one is advertising expenditure of £800 incurred during January 15. This expenditure has not been deducted in calculating the loss of 3,300.
What are your thoughts?
So
your starting figure is your loss of less 3,300.
Yeah.
Good.
Advertising expenditure. I think that's a deductible expense, advertising.
Okay. Even though it was in Jan 2015. And she began
when?
1st July 2015.
That's July. Yeah, that should be fine because it's 6 months for a service.
Agreed.
Jan.
I think the 6 months is specifically for VAT. But generally speaking, I think this is just pre-trading expenditure, so just fully allowable.
Okay. Yeah. The cost of Ashura's office, see note 2. Ashura runs her own business using one of the 5 rooms in a private house as an office. The total running cost of a house for the 9-month period ended 5th April 16 were 4,350. No deductions have been made for the cost of the office in calculating the loss of 3,500.
Okay, so what are your thoughts?
I think you can pro-rata the 1/5, that one room that she was using.
Yes. So okay. So 1 room out of 5 rooms.
Yeah.
Total cost is 4,350. What would you do? You take an allowable deduction. 1/5 of that.
Yeah.
Good. Agreed. And capital allowances.
On 10th of June 2015, Ashura purchased a laptop for 2,600. On 1st of July 15, Ashura purchased a motor car, 19,200. The motor car had a CO2 emission of 137 grams per kilometer. During the 9-month period ended 5th of April 16, Ashura drove a total of 8,000 miles, of which 2,500 were for self-employed business journeys.
Okay, so we've just started trade, so there's no tax written down value brought forward. We have a laptop computer for 2,600. What are your thoughts?
That'll be covered by the AIA.
Even though it was before she started trade?
The
answer is yes. So even though it's pre-trading, it's treated as incurred on the first day of trade. So 1st July 2015, even though it's actually incurred earlier. And then on the actual first day, she purchased a motor car 19,200, 137 grams per kilometer. What does that tell you?
That it's a special rate pool.
6% special rate. Good. 9-month period, 8,000 miles, 2,500 were for business. So we do a pro rata, right? 2,500 over 8,000.
Yeah.
On the writing down allowance.
Yeah.
Okay. I was going to test you. I wasn't going to mention it now, but I'll just mention it this time, and then next time I won't mention it. But your writing down allowance and your annual investment allowance, can you tell me anything further?
9 months.
Excellent. Good. Okay, so next time I'm definitely not going to tell you. So yeah, no, that's good. I think, have you made that mistake before or no? Is that something?
No, but I just remember, I think when I do my capital allowance questions, I always write in the corner how many months it's for.
Okay.
Because I think when it comes to companies, you can have, it doesn't have to be 12 months, right? It can be 15, it can be anything.
No, not when it comes to company. When it comes to sole traders and partnerships, then it can be anything. So then you can have writing down allowance at 6% times 15 over 12, for example.
Yeah.
But for companies, the maximum you can have is 12.
Okay.
12 out of 12. And then if you have a 15-month accounting period for company,
you split.
Then you'd have split, and then you'd have 3 over 12 for the second accounting period. So then you would, but you'd be lower than 12.
Okay.
Good. Any questions?
No.
Okay. Other information. Total income for previous 4 taxes is as follows. So we have 10,700, 10,400, 48,800, 54,300. Why do you think they've given this information? Any thoughts?
Previous taxes.
Previous 4 tax years as well. And then we also have a loss here. So it's opening year loss rate.
Oh, okay. Yeah, to what, carry back or carry back
so
your loss?
You can carry back to the previous 3 tax years on a FIFO basis. On a first in, first out basis, you can carry back the loss after you've adjusted it. Okay, so we'll do A together, and then I'm going to leave the other three for you, B, C, D. We'll just discuss A together, though. State 2 advantages for Ashura of choosing 5th April as the accounting date, rather than a date early in the tax year, such as 30th April.
So she's automatically on the current year basis, so there's no overlap profit.
Good. So basis periods are straightforward, no overlap profits, good. And if you have a date early in the tax year, such as 30th April, what's the difference and what can happen?
If rather than early in the tax year, such as 30th April.
As in, yeah, state 2 advantages of choosing 5th April. Yeah, go for it.
I'm not sure about the second point.
Okay, so it's a bit of a funny one because, like, personally, the way I see it is that so they're saying, what's the advantage of having 5th April rather than 30th April? But I see that there's an advantage having 30th April rather than 5th, which is that if you tax to the 5th of April, which is the end of the tax year, so let's just say 15-16 tax year, or let's just say 2021, you'll be taxed, you'll have to pay a tax by 31st Jan 2022. But if you have 30th April, that falls in the 21-22 tax year. So you pay your tax 31st Jan 2023, which gives you a massive cash flow advantage. You're paying tax a lot later than having a 5th April accounting date. So the advantage of having 5th April is obviously on cessation, which is the opposite. On the opposite, on cessation, if you have 30th April, then potentially you're having an extra liability, even though your business has ceased a long time ago. Does that make sense?
Can you give me an example?
Yep. So, for example, I'll give you an example for the advantage of having 30th April, and then think of it as the opposite. We'll talk about that as well. But the advantage of having 30th April is okay, so if you have 5 April year end, so let's just say you start on 1st July 2020 to 5th April 2021. So this is the 2021 tax year. Tax due 31st Jan 2022. Are you happy with that?
Yeah.
The 2021 tax year. So therefore, you pay 31st Jan following the end of the tax year, 31st Jan 2022. But if you have 30 April year end, so you have 1 July 2020 to 30 April 2021. Obviously, first of all, you have the overlap profits. So you have, I think, is it 9 months overlap? Okay.
Yeah.
But then the 21-22 tax year, what will you have? You'll have a short accounting period, so then you'll have 1 July 2020 to 30 June 2021. So now you have overlap profits again. Okay. And then 22-23, that's when you'll go year end, 30 April 2022. Okay. So obviously there's complications there, having a 30th April year end. Now, what is the other advantage of having this is that on cessation of trade, let's just say you seized on 38, let's just say in this example, you seized on 5th April 2022. So then you'll have 1 May 21 to 5 April 2022. You have the 21-22 tax year, tax due 31st Jan 2023. Now, obviously, we're comparing these 2 dates. So 5th April 22 and 5th April 22 you seize. Okay, you are paying tax here 31st Jan 2024 compared to 31st Jan 2023. So you would have seized in 2022, but you'd be paying tax 2 years later, effectively, about 20 months later. Here, you'll be sorted by then. So even though just because you have a few days difference, you can see the massive discrepancy because of the basis periods, the assessable profit. Okay. So that's the other advantage, effectively, of having 5th April. But then again, it can be argued that tax is due later, and also you can relieve overlap profits on cessation if you have 30th April year end. So it can be argued both ways. But this question specifically asked for choosing 5th April advantage rather than 30th April. Let me leave B, C, and D for you.
Okay.
I'll give you about 15 minutes. But then I'll take about 15 minutes. I think that's enough time because we sort of discussed what needs to be done. But it's just about you now presenting it in a good manner and just following everything through.
Okay.
Cheers. 15 minutes.
I struggle to understand.
Okay, no, that looks good. 300. So, and then so are you deducting or are you adding 800?
I initially deducted it. I initially added it, but then the question says trading loss, so I wasn't getting a loss.
Yeah, so effectively, you'll be deducting your advertising expense. It's an expense. So as per the question, it says before. So the 300 is before making any adjustments.
Yeah, but isn't I thought wasn't advertising expense allowable deduction?
Exactly. So if it's a deduction, you deduct.
So sorry, I got confused.
No, it's fine because in the question it could have been that this figure is after making any adjustments.
Yeah.
So you effectively you might end up doing the opposite. So, but this is an allowable expense, so therefore we deduct the 800, we deduct the 870. How did we get 870? Okay, yeah. And capital allowances. Let me just have a look at your computation, please. 2600 full, 19 at 6%, and also where did you do the 9/12? You'd also have to do the minus 1152.
Yeah,
would also have to be times 9/12 because your writing allowance is prorated. Yeah.
I don't do 9/12 with this one, right?
No, because that you're looking at the annual investment, which is 1 million. 9/12 would be 750,000. 2,600 is Yeah. So we have our revised trading loss of 2,100. That's for 6 marks.
Yeah.
That's quite generous because you'd get a mark for the, you probably get 1.5 or 2 marks, let's say, for the capital allowances.
Yeah.
And then after that, you're just simply picking up. We might even get more. And then you'll get a mark each for advertising office cost. So that's 4. And then there was the other bits, which is, 6 marks. That's very generous.
Yeah.
It's extremely generous. That's quite good. Okay. Explain why it would not be beneficial to claim loss relief under the provisions.
God, this is wrong.
Okay, so we got sorry, you know the capital allowances?
Yeah.
It's a deduction. Capital allowance is a deduction. So you have to do minus 2870. You have to increase your loss.
Oh, does it increase? Yeah, it does, right?
Yes, I think you get confused because you're starting with a negative trading loss.
Yeah.
Everything here is increasing your loss.
Yeah, okay. Yes, because normally I have a profit and then I deduct from the profit.
Exactly.
Okay, so
you're effectively increasing your loss.
Okay, yeah. I think that's what I was getting confused on this question. It's just
exactly. No, I definitely see that. It's understandable, but this is all part of the process and something that comes in the exam you sort. So explain why it would not be beneficial to claim loss relief under the provisions giving relief to a loss incurred in the early years of trade. Okay, so that's when we look at the question. We have a 7840 loss. Okay, you go back. So this is in the 1516 tax year. So if you go back 3 years, you go back to 1213. 1213 is 10400. Why is it not beneficial to offset the 7840?
Because the personal allowance is covered.
Exactly. In 1213, it would have been covered by the personal allowance anyway. So you would rather offset against her employment income in this current year. Or go back against the 1415. Okay. 12, 13, go for it.
Okay, makes sense now.
In terms of getting the full 2 marks, you would say 2013, so we'd rather offset against current employment income. I think that would give you the 2 marks here. Well, I think you'd explain. No, I think that's fine. 2 marks is generous again. Some of these marks you'll start to realize as you get on.
Yeah.
They're very, very generous. You can pick up a lot of marks.
Okay. I'll move this down.
So we have 1516 calculate taxable income. So 7840 is going against working two is taxable because it's she was reimbursed 55 pence per mile. You get a deduction for 2800. Then you take off the loss, and then you take off the personal allowance. Gives you your taxable income. Excellent. Again, 5 marks. That's just amazing.
Yeah.
You're picking up half mark for just putting down your 56,200, half mark for just putting down your less 12,500, and then obviously the other bits you have to think of a little bit, but still, I think you're fluent and proficient, so it's good.
Okay.
So yeah, I won't be surprised to see you on that list. You know that list where they get like the highest marks.
I wish.
You never know.
Yeah.
If you keep going, you never know. Obviously, the aim is 50%, so you shouldn't worry too much about that. But yeah, okay, that's fine. Any questions?
Okay. Nope.
Okay, that's fine. Let's move on to the next question.